Welcome to the Salty Investors, where two blokes talk about markets and stuff. How are you this week, Tim?
Oh, I'm doing great. How are you?
Oh, awesome. But as is sort of custom, we do have to go through what we're salty about. How about you take it away? What are you salty about this week, Tim?
Oh, Tesla. Everyone's complaining about it. It's gone down heaps, but you know, you just look back,
Mm,
especially when I knew about this sector in 2007, 2008. I was all over BYD, which is like the Chinese
yep.
electric car maker. Buffett got in, so I was really excited about it. I could clearly see that lithium was going to, you know, get all over hydrogen. It was going to totally beat it.
Mm,
Um, but I was concerned, just a normal value investor. Look at the debt, you know.
yep.
You remember the double dip recession that was supposed to happen that never did? Um, yeah, I was worried about that, and I thought the Germans are pretty good at making cars. Why
Yep.
does some American car maker come back? Um, but they never did. The Germans just sat around and stuck with their diesel crap
Mm,
and never went into ice. Um, and the other thing I underestimated was rich people. Rich
yeah.
people love to buy these things and then they think, oh, what can I invest in? What do I know? And then they just go, oh, I bought Tesla and they're buying this crap. Doesn't matter what the fundamentals were.
Yeah. Well, there's
And
been a real
so,
there's been a real bull market in virtue signaling as well. I think that's part of it. It's I'm a good person because I bought a Tesla, and it's good for the environment, even though the lithium was mined by children in the Congo.
yeah, and like rich people have just got way too much money and,
Yeah.
fundamentals, that doesn't matter.
Mm.
Yeah. And so Buffett made out with a 40 bagger on BYD, which looked like a dog for ficking, over a decade.
Yep.
And even if I missed Tesla early and got in at 2019, at the end of 2019 to today, it'd still be a 40 bagger.
Wow.
But that just shows that money printing, and rich people, So I don't know. What are you salty about this week?
Let me just comment on that Tesla thing. Was just, you know, Tesla only survived because it could consistently go back to the market and ask for more money.
Mm-hmm.
But there's been some stupid comparisons throughout the years with Tesla. One of them was to call it sort of like a new Amazon. It's for a start, it's not a tech company. It's a car company with a shitty solar business on the side. Um, and a flamboyant CEO that gets involved in all kinds of ridiculous projects that are absolutely useless, like the Boring Company. We have subways, mate. You don't need to drive cars in single file under the ground. It's just, it doesn't work. But anyway, the argument that Tesla was like Amazon,
Mm-hmm.
Amazon raised capital once, I think in about 2001, never had to raise it again. Tesla is a capital intensive business that requires oodles and oodles of capital. And Musk consistent. I mean, Musk said, "Oh, we don't need any capital," and then he would go to the market to get capital. His bonds were in trouble there for a while.
Oh yeah. Mm-hmm.
Um, my problem with Tesla is never thought like it's got to go bankrupt. It's a piece of crap. It's just way overvalued. It's not a tech company. It's a car company. Remember the robo taxis? The million robo taxis were supposed to be on the road as of 2 years ago. Nowhere to be seen. Remember the solar
Mm-hmm.
tiles on your roofs that were supposed to look like real tiles? No, they don't exist. Musk is a great showman. I think he's the P.T. Barnum of the modern age. But at the end of the day, Tesla's a car company. It's capital intensive, low margin, low return business. Yeah, and he's
Mm-hmm.
growing sales at a good
Yep.
clip right now. But at the end of the day, it's not that good a business. And I think, yeah, if you didn't get into Tesla, and enjoyed that upside in the last whatever it's been 10 years, I think you missed it. Quite frankly,
Yep.
those days are gone.
On.
Anyway, I don't
Yeah.
know.
So what are you salty about?
Salty. Stage three tax cuts in Australia, the ones that were legislated by the coalition, the Labor government supported it. Now Labor's in. Now we're facing, uh, what difficult economic times. Our terms of trade have changed because commodity prices have come off. We're not going to have the surplus that we thought we are going to have, or higher energy price. All this, and of course, there's a growing chorus of sort of people on nominally of sort of a left-wing political and economic persuasion sort of saying that these tax cuts are going to cost us too much. We can't afford it. And it's always an interesting way of framing tax cuts, that they cost us. Like,
Mhm.
why are you against people having more money in their pocket? There's the politics of resentment for a start. You know, I only earn 40,000, and this is not going to really help me. I might get, but the guy on 200 grand is going to get another 10 grand or whatever. It's like, yeah, that's the way numbers work. You know, but what you need to concentrate is getting your income up. You know, not trying to stop someone at a higher level, actually putting more money in their pocket. I mean, I think it's absolutely outrageous that the top tax rate in this country is, what is it, 47? Is it?
Yes. Oh, but do you count the Medicare levy in that as well? Like,
Yeah,
when you
yeah,
start,
you add that on, it's nearly 50, right? Like,
yeah,
that you go to work, and that every dollar you earn, you're nearly handing half of it over to the government. I mean, to the extent that people have a point about it costing, okay, it's less money in the pockets of the government, but to me, that's a good thing. Government generally wastes money, and yeah, I mean, I'm quite happy with stage 3 tax. I'm not as I said to you offline, I'm not in that. It's not going to help me at
yeah,
182,000. I'm not at 182,000. I'm nowhere near it. But you know, at the end of the day, this is really just keeping up with bracket creep of the
yeah.
tax system. That over time they don't change the tax rates or the level at which tax rates kick in, and therefore, you sort of end up paying more tax without realizing it, because your wages are going up a couple of percent a year. The only quibble I would have is that maybe, if to target more relief for people at the lower end, I mean, let's raise that tax-free threshold, which has
Mm,
been the same for what, 20 years or something. It
yeah,
hasn't moved. I mean, if you just said 40 grand, basically that would mean no one on minimum wage would pay any income tax, and that's worth about what, 5 grand a year,
yep,
just right there,
yeah,
20 cents in the dollar on 20
mhm,
grand, or a little bit more. So, it's just, wow. I mean,
yeah,
that's a lot of money to someone on a low wage. But yeah, anyway, it's sold on this framing of tax cuts as costing us. It's like, yeah, who's it costing exactly? There's going to be reduced government services. Oh, good in some areas. Please reduce government services. Thank you very much.
uh,
Yeah. Well,
I
that's
think they
probably,
think it's like Scrooge McDuck. People are just sitting hoarding money,
yeah.
and they're just sitting in these big money pits. And if the government had it, they'll be able to put it into useful things. But
God. What, like
that's
quarantine facilities
yeah.
or
Light
desalination
rail.
plants?
Or, yeah, yeah,
Yeah.
yeah, yeah. There's heaps of things they could think of, and
Yeah.
obviously it doesn't work out. So,
Yeah. Well, okay, let's move on from the salt to something a little bit more uh, macro, I suppose. Yeah, this was in the Wall Street Journal. It was an article. I forget what the article was called, but I thought this phrase was good. There are no immaculate tightening cycles. Now, what that means is there are no cycles where things get tightened and something doesn't break. Now, I guess you could have a quibble there in the early 90s after the 90s recession and interest rate. The Fed funds was down about 3, and they took it up to 6, and nothing.
mm-hmm.
I mean, yeah, Orange County declares bankruptcy, but it wasn't exactly,
Yeah.
it wasn't a market-ending, destroying sort of event, but this sort of coincides, doesn't it? I mean, I think when you get to the long-term capital management bailout, that's when Greenspan starts putting his finger on the scale, and it starts this era of really erring on low interest rates. I think he's
Mm-hmm.
still gotten off lightly for
Oh.
his blowing of the real estate bubble in the early aughts. I mean, that really, a lot of that's at his feet.
Mm-hmm.
But yeah, I just thought it was an interesting charge. Like, when we the sort of argument there's been there for a while about soft landing, it's pretty hard to have one, because you got to think about, monetary policy is a very blunt instrument, isn't it? It's just a very blunt instrument. It doesn't take account of your personal situation
No.
at all. I mean, it's just, do you have debt? Well, you're going to have to suck it a bit. I see a growing number of just articles, like in the Financial Review here in Australia and other places, about all the coming mortgage pain, repayment pain that people are going to have. It's like, why weren't you talking about this 6 months ago back in, well, nearly is 6 months, 5 months ago in May when the RBA started on this journey and the Fed was doing it. It's like, this was obvious, but it seems as though people don't wake up to it until they get that electricity bill, till they fill the car up at the pump, until they, notice that their mortgage payment has changed, that oh, gee, really? Yeah. That's probably enough on that one. This is sort of, I guess this is what we should call this, a sort of recession watch or slowdown watch, or, quarterly PC shipments dropped by 15%. So that was, and Dells were down 21%. But PC shipments were overall down. They were 74 million in the quarter, down from 87. Again, this was pretty well telegraphed. A lot of pull forward of this stuff, people working from home, et cetera, et cetera. I love watching this stuff because personally I want to buy a new computer, and I think there's going to be some great specials at the end of the year, don't you think? I think there should be.
Yeah. What are they going to do with all this inventory? Like,
exactly.
Yeah. You've seen all those graphs of, inventory to just, over a period of time. You just think, wow, this is insane. How much inventory they got, holding on the books here. And holding technology inventory is probably one of the worst things you can do. Like if you miss a cycle and you're stuck with all this old inventory, you can't like.
Yeah, I don't want an i5 chip. They're old. Yeah, I want the i7 now.
Yeah, so I don't know, like very nasty stuff. So I think Buffett's in HP. So
is he?
Yeah, this would be interesting to see what happens here. Yeah, I like the HPE, which was the server side. They split it,
right?
So they've got the old printer and old hardware type side, and then they've got a cloud type version of it. But
I have a probably an irrational bias against HP because I bought what was it, 5 or 6 years ago? I bought the first all-in-one computer from HP, their first version. So it's just a screen. That's it. There's no, and you just a wireless keyboard, off you go. And oh god, it was a nightmare. I'd never get one again. I'll never buy a HP again just for that.
Anything breaks, you have to throw the whole thing away.
Yeah, I did. It lasted. I don't think it even lasted 2 years. I think it lasted 18 months. It was gone. Yeah. So that's a bit of recession watch. And and this is just a sort of a. So last week, as we know, in what came out, non-farm payroll. So that comes out the first week of every month in the United States. It's basically their employment report. There's 2 surveys. There's the household survey and there's the establishment survey. Now, at various people have argued that at turning points in the economy, the household survey actually leads. The reality is neither of those are leading indicators. Employment is a lagging indicator. So people have in the past looked at things like jobless claims. So people applying for unemployment insurance in the United States, as they do. But even that's sort of at best a coincident indicator as well. Now, this is what's called JOLTS in the United States. It's job openings, and I forget what the rest of it stands for, but this is just one aspect of that report. I just thought I'd put this up here because if there is a leading indicator with employment, this is probably it. And as you can see, look, if you look at 2020 on that chart, it's pretty significant down. And then after that, there's this massive gap up in job openings because there was this sort of psychological change where people said, I'm not working 50 hours at, Chick-fil-A. I'm not going to do that. And there's just shortage of labor. What they call it, the Great Resignation. And so this idea that the markets crapped themselves last week because there was a strong non-farm payrolls employment report, which is a lagging indicator, which means that the Fed is going to keep their foot on the accelerator. Now, I just have to think that people out there who really do look at employment and look for signs that the employment market may be softening would have to be looking at things like this JOLTS rather than non-farm payrolls, which is a lagging indicator. I've said to you offline before that if you were waiting for payrolls to turn negative during the great financial crisis, you would have been something like 6 months late, because the revisions to the data showed you that there was a recession already started at the end of 2007, January 2008. But at the time, in real time, if you're looking at non-farm payrolls, you wouldn't have had a clue. So this could have been part of the salty bit, probably. Just annoys me that markets react the way they do on sort of those lagging reports.
Did you see the PPI numbers come out?
I didn't.
Last night.
What were they like?
Yeah, a little bit higher in some areas, but basically with expectations. But everyone was hoping for a drop, and,
right?
And nope, they're staying steady. So, like, I don't know.
Yeah.
So, what are you sort of thinking for the Fed meeting coming up? What are you thinking?
That's first week in November, isn't it? I think. And then that the last one before.
Yeah, I think it is.
That's the last one for the year, maybe. Yeah, I don't know. I'm open to the idea that they'll just go 50 instead of 75, but I'm not going to be surprised if they go 75. I mean, it would seem, if you're going to now back off once you've done all this work at this point, maybe it's like that could easily come undone pretty quickly.
Well, I'm hoping for that sort of scenario. Like, I hope the Fed does 50. This is, I'm always living and hoping for some, some entry point here. I want to get to VIX 40, you remember? So,
yep.
So my hope is here, they do 50, the market rallies hard.
Yep.
And then, rallies hard for a couple of months. They come back in January and they keep hiking. They do another 50 because inflation hasn't tamed.
Yeah.
And then the market goes, holy hell, like, we've bought in here thinking that, the races are on, and
air pocket.
Powell's kept on going on us. So
yeah. So
then that capitulation will start, and they go, oh, this is never going to end, and this is.
well, I think the other thing that's probably keeping the market at least where it is the fact that earnings just really haven't rolled over yet. And that's sort of the last leg they have to stand on. And my view is, I mean, I don't think necessarily that what they'll start reporting this month, third quarter calendar year earnings. I don't expect to see that they've fallen off a cliff or anything, but I do expect more and more revisions to start and people cut numbers, and so that's sort of the last leg of the stool, if you like. And if you start to see more of that, and the Fed just keeps the pedal to the metal, then I think, I can see a 2 handle on the S&P, no problem. I mean, why not?
Wow.
But I mean, look, it topped at 48 something. I mean, to get to, it's not even have to get cut in half to get below 3,000. It only have to be. And remember, we're starting from the highest valuations in history. And I mean, it's not the financial crisis, but I mean, stock markets get cut in half all the time. 74.
Well, I just watched a video from Spitznagel. I don't know if you remember him, Mark Spitznagel.
Yep.
Universal. Yep. And he's gone, the balance sheet, crap I've been talking about, has only gone down 1%. Where's this tightening coming? Like, just all talk, he's a psychop. He's talking it, it's just all talk, that he thinks Powell's going to do it, but maybe, like, is he really going to do this, and
well, that is part of their arsenal, isn't it? Talking it down. They think they can talk markets down. Yeah.
It'll be interesting to see what happens. So,
So that's the jolts. Keep an eye on that. As I said, I mean, it's rolled over from a record of 12 million job openings down to 10. So it's still really high. So I'm not sort of calling the turning of the labor market just yet. This is a little bit of a light entertainment. Cramer. See, now I have to say that I think I first came across Cramer, I would say around 2006. I would say this was before you could go on YouTube and watch CNBC. You had to go to the CNBC website and you had to stream these crappy videos that still would stop and start all the time. And I lived in Japan at the time, so internet was pretty damn good comparatively. But still, you just have to watch these tiny little screens of. And I remember watching him and thinking, "Oh, this guy's just a clown," because he had this show, Mad Money, where he would press buttons and noises would happen. And I'm like, I thought, yeah, okay, so this is what happens in bubbles. You know, you get idiots like this. I mean, he was a serious trader back in the day for Goldman Sachs and
Yeah.
all that. But then, you know, he's become sort of clown show. And then when you had the financial crisis, and I thought, well, you know, he'll just go away. And I honestly I haven't looked at him for years. I mean, I just don't. So I went back and had a look at his show, and he's still doing exactly the same thing. And it's just like nobody wants to tap him on the shoulder and go, Jim, that's enough. We've had enough of the noises and the sound effects, and it's no one's buying the crap. And one indication is this. Prospectus from Tuttle Capital Management, who've decided to come out with an inverse Cramer ETF. I mean, it's hilarious because Cramer has made some pretty awful calls in his time. And I think you mentioned before we went live about the best. Was it Lehman? Was it Lehman or Bear Stearns?
Lehman or Bear, yeah.
A
couple of hours before midnight saying buy it. You know, he's still famous on YouTube. Go look it up.
Yeah.
And he's going ridiculous at this price, you know. And he understands leverage and derivatives and all this. It's not like he's, come around last week. Yeah. And like people are just turning on their TV and listening to this guy and buying this stuff. And when you look at some of the people he brings on, you're like, wow, this is just total junk. I'm not sure if he's has the hand open elsewhere to, I don't know, but it just the softball questions that come in, like for these junk companies that it puts on, I don't know, it's just someone with his experience, you should be hitting them a bit harder, I think. But
yeah, it's just, I think it's sort of it's like, I don't know, it's like cold calling or something. It's like a model of finance that's sort of antiquated and out of date. And I don't really understand why he still exists in the format that he does. Doesn't really make any sense. But somebody did say on Twitter, they said, what if Cramer recommends the inverse Cramer on his show? What happens? Does the universe implode? I don't know. It's an interesting question. But speaking of lighthearted, I mean, this takes the cake for mine this week. Cathie Wood, you alerted me to this. Now, I know you may have a more nuanced take than me, but here's what I think. Cathie Wood should change her name to Karen Wood, because as we know, a Karen is the type of person who wants to see management because she's upset about something, and Karen Wood wants to see the manager of the stock market. Now, this is an open letter to the Fed, but she really wants to see the manager of the stock market because, as we know, ARK has blown up. I think it's down 75% or something. Her 5-year returns are now less than 6%. So she is actually, if you invest with Cathie Wood over the long term, Karen Wood over the long term, you're bound to lose money. So my view is this. Here's my question to you about Karen Wood. Is she in the denial phase of grief, or is she in the pleading? Because this sounds like pleading, and it's also she's in denial. What's your take?
Oh, it's hard to tell what she's thinking, but like she still can go on TV and talk up her stuff. I think it's denial. Just assuming that we're going to have bull markets all the time, and you're going to pick highly risky, leveraged, no cash flow type things, and think they're going to work, in every cycle, because innovation is going to save you. Wow, this is, and we just don't know how long this is going to last. If this lasts another 6 months, imagine what this is going to look like. This is But,
well, I think it's interesting about this cycle is that I would have thought someone like her, it'd be over. People would be saying, she invested on a theme, and a theme worked for a while, and now it's over, and she's over, and she's a one-trick pony. She's not particularly good at picking stocks. She just rode a theme, but still, they'd still treat her like she's actually worth like talking to. I mean, if you think about it, her 5-year return is something like 5 or 6% per annum in an environment where the stock market's returned something like 10 or 11. I mean, she is costing you. she's only half as good as an index fund. That's what she is. She adds no value. She detracts value. So I mean, again, it's maybe this stuff just takes longer to wash out. I mean, one of the things. I mean, I don't remember her writing a open letter to the Fed saying, as she says here, the Fed's making a policy. I don't remember her saying the Fed was making a policy error at zero interest rates,
That's right.
which I think was the biggest error. So I mean, this is just someone talking their book. It's Karen wants to see management, and she wants management to do something, and I just hope management tell her to take a hike. Quite frankly,
Yeah. Well, I think management's got bigger problems than Cathie would.
Yeah.
Yeah, and it's like 2000 again. All the people who invested in this, obviously high net worth people, and they're all willing to have a bet in this, and didn't work out. I don't know. It's a little bit sad because I see a lot of retail people following it in,
Yeah.
And they haven't no Buffett. They don't even understand anything about valuation or cash flows or anything. They just see bright eyes. We're going to be making millions here, and
Yep.
it's ended in tears, I think. But even if the market does rally, I don't see, this coming back as strong as what people predict.
No.
I know you might think differently, but
no, I don't. I think you're going to have multiple compression. I mean, how can you not? I mean, what you would have to believe is that we go back to quantitative easing and zero interest rates within the next. Look, I have no doubt that the Fed will go and print money if things get bad enough, but I don't know. I think there's a reluctance to admit that maybe there's been a structural change here, and we're not going back to those times. And quite frankly, people like to go on about income inequality, and I think the Fed has probably been the single biggest driver of income inequality in the last 10 years. And in Australia, look, our economy. There's an argument to be made that our economy can't handle higher interest rates because we are an economy now based on inflated. There's so much wealth tied up in people's households that the government and the Reserve Bank can't really afford to deflate that because there'll be blood in the streets. But I mean, it really does need to happen. I mean, it's not healthy just to have all your wealth wound up in your house price, which is not really wealth at all, is it? I mean, it's like when people say, "Oh, the market was down 5%, and 1.2 trillion was wiped off." It's like it wasn't really. It's not like you work. Anyway, going on too long.
Just a number. It's just it just doesn't mean value. Like your house hasn't gone up in value 20% in the last year. That's just a load of junk. Just the numerals gone up a little bit. So I don't know. Just people conflate value with numbers.
Yeah, even in New Zealand. In New Zealand, I see that house prices are now down about 13% from the peak, 12.5%, 13%. But on a 5-year, they're up. I mean, they're up something like single digits over the last 5 years. I mean, this is not a horrible thing to happen and the people that go on, I mean, it's usually people going on about, oh, isn't this so awful? But at the same time, they want the government to do something about home ownership for young people. And it's like, this is exactly, just let the market work, just let it go.
Yeah.
House prices can go down 20%. Anyway, that's enough about Karen Wood. Okay, so you have some interesting. What do we got here? These Google searches, are they?
Yeah, Google Trends. So basically, I'm trying to find headwinds and tailwinds. So I left out Google out of this because it's just so huge on the search terms. But as you can see, Amazon, just keeps getting stronger and stronger. And and you got all these other companies, the purple one here, which is
Meta. Yeah.
And everyone's going, I'm going to buy the bottom in this thing. Looks like a turnaround to me. It doesn't look like it's going in the right direction for consumers. And you got some other, Microsoft, pretty steady there. So that's not an Apple. That's just, keeps going chugging along. So
what are those spikes? I'm assuming those spikes with Apple are sort of product releases, are they? Is that what
yeah, that'd be. But you can see the
iPhone?
Amazon ones are the classic because
Yeah.
of Christmas, you know.
Yep.
But you can see it just creeps higher every year.
Yep.
So yeah, that's what I'm trying to do. I'm trying to think, oh well, you know, get burnt by Tesla here, you know, going against rich people, and you can
Yep.
see Apple here, like it's just rich people just keep buying the new iPhones, you know,
Yep.
and keep searching for it, and yeah, that's all I'm trying to do is trying to think about this a little bit more from the consumer point of view.
Yep.
Um, and Tesla here hasn't gone anywhere, you know, for a major cap
Mm.
company, still isn't in the minds of people too much. You know, I know it's only a one item, but
Yeah.
they're one trick pony at this stage, you know.
Well, as you say, I mean, I mean, they are. I mean, all the crap about Musk when he came and said we're going to make a $35,000 car, which they don't make. You know, I mean, basically, you can get a chassis with no, like you for
Nothing, yeah.
35 grand. Yeah, it's a luxury car, and the amount of people that can afford a 50,000 plus brand new car is not most of the population, right?
Mm-hmm.
And especially when, I mean, it's just not a mass market car. It's not like a little Toyota Corolla, you know,
Yep.
that anyone could afford, but or most people could afford. But yeah, it's still a luxury car, and it's I think it's sort of that it appeals to that set, you know, and the only way, I mean, guess governments can force people to buy electric cars and offer them massive subsidies and everything else, but geez, that's a big gap you have to bridge there to make a Tesla a sort of a standard average car that everybody else can drive. Maybe that's just my lack of vision, and I just can't see that.
Well, if the government does push it, what are they going to do with fuel excise? You know, because that
Mm.
only 30% of it goes to roads. You know, all poor people pay. You know, the ICE cars are paying for all this crap. You
Oh,
know, who's going to pay for the roads? Like,
they'll probably charge you a fee to use charging stations or something. I don't know.
well, there goes the difference of making it cheaper than
Yeah.
you know when I, you know, like just people aren't really thinking about this stuff. But yeah, I've got a few more. I did
Yeah,
a
let's have a look.
couple others. Yeah, just wanted to quickly go
Nike,
through them.
Adidas, New Balance. Yeah.
Yeah, so you can see, you know, Nike is still, you know, trudging ahead. You know, and if you going against it and you're going to go, oh, I'm going to buy Adidas here, you know, you can see that's on a downward. But yeah, you can see New Balance. I looked it up, but it's a private company, so you can't get into that. But it looks like it's, you know, gaining traction here in the consumers' minds. So, yeah,
Nike has shrugged off the '90s label of sweatshop labor.
Yep,
Nobody
don't care.
cares. Nobody cares.
Yep.
That was a bit of a beat up anyway.
Yeah.
Adobe, Salesforce, QuickBooks, and Oracle. Ooh.
Yeah. So you can see ones from the 90s, you know, they've really come down in favor, but, you know, everything here is converging. That's what I'm sort of showing. And the Salesforce and things like that aren't really taking ahead yet. But so, yeah, that's as you got so many technology companies now, and they're all sort of, you know, cannibalizing each other, I think, to a degree, you know, compared to in the past where you had these big players that could just dominate.
Yeah.
Oh, yeah, that's all about that one.
Intel, AMD, Nvidia.
And this is even worse.
Yeah, that's surprising, actually, I would have thought.
Yeah, so you can see how these three are just totally eating each other's lunch.
Yep.
You know, they're all doing, you know, GPUs, you know.
Yep.
So, you know, and they're all in the same space. I know Nvidia isn't doing CPUs, but crikey, look at that. Like it's a war. Like you can see it. And all they can do is just price cut each other and bring out better and better stuff. Like, so you're going, okay, well, should I be putting capital in this area? Really?
Yeah. It's just a. I think returns are going to be compressed in these areas. Yeah.
Great for consumers.
Yeah.
Like you got to be a consumer in this area, but investing capital, like crikey, it's going to be a little bit hard unless you can really pick a winner here. Yes. So the next one is
Visa,
Visa,
Mastercard, PayPal, Stripe. Yeah.
and so you can see Visa and Mastercard, which are the companies that I love the most in the world.
Yep.
Super high returns on capital employed. Um, just unbeatable companies. Low capital type companies that just keep reinvesting at these high rates. But you see, PayPal is still in the consumer mind, but they're just doing stupid stuff. They can't reinvest their capital.
Well, they just started banning people for stupid reasons, and now they did a sort of a walk back of it.
Yeah, people are deleting their PayPal accounts and things like that. Just stupid moves, and they're going to try Pinterest. They're going to buy that.
Right.
What the hell do they know about social media? Just you know. So I see, people are just dropping it from their portfolios as well.
Right.
Yeah, so I don't know, but you got this other one that I really like was Strike, which is
Stripe.
like
Yep.
yeah, I think it's gonna overtake PayPal at some stage.
Right.
Especially on the developer side, it's doing really well. As you can see, it's lifting here on the bottom of the graph. It's a long way away from
Yeah.
taking out Mastercard and Visa, but I think once that goes public, yeah, it's just one of those things that you see no one knows in the background, but they're taking a clip,
Yep.
of everything.
Yep.
So like the old PayPal model, take a small little clip of everything. Capital light, but yeah, you get idiots running the show, and you destroy shareholder value.
Yep. Yeah. Costco, Walmart. Interesting.
So you can see how close they were,
Yeah.
decade ago, and one's gone international and one hasn't. So if you
Yep.
can't expand your market and grab into those international areas, I hear people all the time saying, "Oh, New Zealand, they just started Costco. It's one, it's got lines coming out the door, and China is like,
Yeah.
huge amounts of growth."
But
And
I was going to Costco when I lived in Tokyo in 2006 or something. Yeah.
yeah, okay,
It's been there for Japan's had Costco for I'd say nearly 20 years.
uh-huh.
And trying to go to a Costco in Japan, like in Tokyo, with a metropolitan area of 30 million people, it's ridiculous. Oh God, it's a complete day out.
Yeah, but as you can see, but Walmart has just sat in the US and
Yep.
it was still building out stores, but just doesn't have that reach. If it came into other markets, I know it's in a couple of places. I think it's in China and a few others, but we haven't seen anything in Australia or New Zealand, and just let the big players go for it.
Yeah.
Yeah.
All right. We got any more? So who have we got here, Tim?
Yeah, I heard someone had a couple of USD sitting around. That's
Yep.
done really well for them, and I thought, well, where could they allocate this capital? And I see UK is on fire at the moment. They're burning to the ground. It's going to not exist in a couple of years from looking at the markets. And I thought, oh, well, what could I take those USD and maybe put it somewhere in the UK? And, what would I buy in this fire sale happening in the UK at the moment?
Yeah.
So I found this company called Rightmove, which is basically Zillow or realestate.com.au in the UK. So everybody selling a house or every real estate agent basically has to use it.
Right.
It's sort of like this, pillar of the real estate industry. So real estate agents hate it, which gives you an indication that there is no alternative out there. And this is, as an investor looking for a moat, this is the sort of things that you salivate over, that people, got no alternative. They've got to use the product.
Is there an incipient, like in Australia here, we basically have realestate.com.au and then the poor man's version, which is Domain. This does all right.
Yeah.
But what about, is there any competitors here that?
Yeah, there is, but it's the same things in Australia. Like
Right.
everybody goes to realestate.com.au,
Yeah.
and if they really got extra time, they will go to Domain. And when you're second trip around, you're not going to be getting that many eyeballs, and you're selling an asset worth $1 million.
Yep.
you're really going to start penny pinching and going, oh no, I could save, $100 and potentially miss out on all those eyeballs, you're just not going to do it. Like,
Yep.
you're just costing yourself money here to find a buyer, or trying to look for a place. You're not going to be penny pinching here.
Yep.
Especially when it could cost you in the wholesale. So I think it's pretty dominant. I don't think it's it's going to go through a heap of pain. Like at some stage, like if interest rates still climbing.
Yep.
I know their central bank is doing some funny business at the moment.
Printing, yeah.
Buying up bonds or gilts, whatever they call them.
Yep.
How long they're going to keep this up for? Like, they can keep it up forever, I suppose, but it's not really a free market if you got
No.
someone.
Well, actually, I did listen to a podcast about why, I think it may have been Josh Brown's Compound with Michael Batnick from Animal Spirits, and they had a conversation with a guy in England. And my understanding is that the reason why the government had to step in and buy up gilts is because you've got a lot of pension funds that have, it's the same story you've heard in the United States about municipals, that they have certain obligations to pensioners they've got to pay out over 25 years.
Mm-hmm.
And of course, in a low interest rate, low return environment, they struggle to meet those benefits that they have to pay out. And so they leveraged up on derivatives and things to soup up their returns. And of course, when you have a sudden, change in interest rates, guess what happens? And, all our little risk models that we have fly out the window, they don't work now, just like VAR. VAR was the word du jour in 2008. And then VAR's not actually useful when, whatever you want to call them, 2 or 3 sigma events happen, which aren't supposed to happen, but they seem to happen all the time.
But if the central bank's buying, is there really price discovery? Like,
exactly.
Isn't this illegal? Like, if I go do this sort of stuff, like, it's like, oh, you're just, mucking up price discovery here, Tim. You're sort of destroying the market here. You're not allowing the price to find its natural level here.
But I think, we touch on this last week when we talked about the sort of institutionalization of moral hazard. I mean, that discussion's over. We've decided that, it's on the government to bail out banks. It's just sort of they are the wicket keeper to banks, sorry, if you're an American listening, they're the catcher, I suppose. It's the right analogy.
Yeah.
We've institutionalized it.
I know. Yeah. So, but how long will this keep going? And, will their central bank stop buying? And then it might open up a real opportunity here for the market to come down to the proper price discovery mark here.
Yeah.
So I don't know.
Again, it shows you how fragile it is, because, I mean, my understanding is that if you have a gradual increase in rates, I mean, this is actually good because they can then purchase securities that have higher yields, and they pass that through, then they can meet their pension fund obligations. But because you've had such a strong move, and so the collateral of the ones that you own has obviously gone down because it's the inverse to the yield, right?
Mm-hmm.
And so, and because they're levered, because they've got these derivatives to try and soup up the returns, and there's this, whoa, shit, the collateral, we don't have any collateral to meet. They start getting margin calls, and you just think, like, how many times we got to go through this? Like, God almighty. And this is why we do have a government backstop. Imagine if we didn't have one.
But would people take this risk if there wasn't the backstop here? It goes back to that moral hazard question you had before. Like, you're just creating this endless loop of, second guessing yourself, thinking, should I take the risk or not take the risk? It's not allowing price discovery. This should be illegal. Like, in a free market, this crap doesn't happen. And people, can make solid decisions. Like, it's hard to make investment decisions when you're going, is the backstop going to happen here or not going to happen here? That's not a way to run a society.
Whatever happened to Schumpeterian gales of creative destruction? Whatever happened to that idea?
Yeah. Karl Marx, where are you, brother? Come on back, like, like, we need you again, we need, like, but yeah, that's out the window. But yeah, so try to look for something that you could possibly pick up here, if something happens here.
But what, because it looks like they're, I mean, because I can't see a stock price or anything or earnings, but it looks like if you just look at price to cash flow ratio, that's come down. So I assume that's reflective of the stock price coming down.
Yes, yeah,
It's
well,
come
makes
off a
sense,
bit.
yeah. So, and you look back at those past years there, it's quite a good price, price to free cash flow multiple there. You're not buying it, but I think there's a little bit more pain to come in. Like I said before, 1% of the balance sheets come off. Wow, what happens if we had 10% come off?
Yeah.
Like they have moved it before, and then
Yeah.
but everyone's thinking of 2018 again. It's just all talk. That's still the current sentiment.
Taper tantrum. Yeah.
Yeah.
I think
Yeah,
the
remember
longer
that?
the longer this goes on, that's what it'll turn into. You just have this hysterical chorus of stop. And it's just that I don't know. There's maybe it's the nihilist in me or something. I just like no. I'm rooting for Powell. I just keep going. I just want him to keep going. Yeah,
well, we should be, and that's what it's supposed to be. Someone of last resort. The lender of last resort. But you can't do that if everything's at zero all the time. You've got to have some leeway to be the lender of last resort. You've got to have some levers to pull here. And in the good times, people go, "Oh, don't stop it now." And then in the bad times, it's like, it's you can't do it now. So
well, that old phrase when I first started taking the punch bowl away. I mean, that was the idea. You don't let bubbles blow up if you can help it. You take the punch bowl away. Which I mean, bloody Greenspan, he took the punch bowl away and he just filled it up, and then he replaced it with 5 punch bowls, and spiked them.
Yep. Yeah. We're still living with those decisions today, and
thanks, Maestro.
Yep, and people have still got that in their heads that this is what to do. So I'm thinking, this maybe I'm getting greedy now. I'm thinking, this is already down 40%. You used to call that a crash in the old days. That used to be, you'd say, oh, that's more than a correction. That's a crash.
I mean, how do you? So, I mean, is this as simple as saying that they take a clip on listings? So, like, the more houses that are listed on their site, the better they do. It doesn't really have much to do with price, though. Like, whether house prices are going up and going down, it's just a matter of is there good turnover in the market? I mean, is that
turnover is the one that you're just not getting the quick turnover, so you're still going to get lots of listings, and if the price is low, you're still going to get a clip on them, but you're just not getting the rotation. Like people aren't flipping, so you're not going to get high returns here. But at some stage, this will end. It's going to have a washout, and then so you got to go through the washout. You can't pick the bottom, so
and if credit is it's worse for them if credit is tight. It's better for them if credit is easy. People can get credit. They can get into houses easier, faster. Yep.
And they can do all other things as well. They can, link into finance and do all this other stuff that they can do side projects on here. You don't want them to be like Zillow, actually flipping houses, but, anything crazy like that. But, they can get into other financial products and other services that they can tack on to real estate agents here to, like they can take commissions, for example. They can forward real estate commissions onto real estate agents, so they've got a bit of extra cash flow and take a clip of that. Actually, when they sell the place, so there's heaps of financial, add-ons you can do onto this industry. It's just when you're keen to, start taking a tranche in this sort of thing. That's all.
Yep, the eternal question.
And and I'm thinking, greedy. I'm always greedy. That's part of my nature. And I'm thinking, under 400, you should be. But then it gets to 400, I'll be like, 350, So
is this listed on LSE or NYSE or what?
It's on definitely an LSE. I'm not sure if they got on dual in the NASDAQ, but it's quite a big company. So I just no one, everyone just goes to Zillow to start off with, in investing. No one really wants to look at the UK at the moment. It seems to be, but
Well,
you're supposed
that's
to,
a good reason to look at it. The
yeah,
fact
yeah.
that no one wants to look at it. Yeah.
Remember, they did run the world, not that long ago, so, they were they're not total basket cases here. You're not looking at Argentina or something. I'm not going to, totally the bottom of the barrel here. So I think they will come back. And I think the euro is worse than the UK for economy. So, I'd rather pick the UK. But yeah, just when do you start? Hopefully there's some smarter people than us listening to the podcast and do some comments. I'd love to hear it, feedback on it. So,
all right. Well, we'll leave it there. What was the name again of that stock?
Right Move.
Right Move. Okay.
Yeah.
There you go. Anyone want comments of our? I've noticed that our subscribers have ticked up to 5. So any one of you 5 subscribers, which is not you, me, or my mum, can weigh in. Okay, so that's about it for Salty Investors this week. Thanks for tuning in, and we will see you next time.